Hello, it's your friendly neighborhood Hank. I'm making a video right now about estate tax and tax policy. It's terribly interesting. Actually, it is pretty interesting. I hope you think it is, because it's going to go on Vlogweathers tomorrow. But I wanted to add a little bit of something that I couldn't fit into the video, which is why stock prices matter. So when you invest in the stock market, or the money that's invested in the stock market, whether or not you invest, that money isn't isn't the company's operating income. That's just the value of the company. So that money doesn't get used to pay people or invest in the company. It's basically just like we have decided that this is how much the company is worth. Now, it confused me for a long time. I couldn't figure out why companies even cared what their stock price was. What's the point? Why don't you just, do your business and, quarter to quarter, what do you care what your investors think of you? And if they're trying to, run away because they're like, you're not going to make me a quick enough profit. I'm out of here. Why do you care? And I figured out a few reasons. And I'm sure that there are more. But here are the 3 reasons. Starting with the appropriate, the good reasons to the reasons that are kind of crappy. The first reason is that you can borrow money based on the value of your company. So that is then operating income. So if General Motors says this is how much my company is worth, then they can use that as collateral for a loan, and they can take out a big, huge loan and use that to build a new auto-producing plant and hire a bunch of new workers. So that's a totally legitimate reason to want to have a higher stock price. So that is an actual useful effect that stock prices have on the world. 2, if your stock price gets too low, it becomes very easy for a competitor to come in and take your company over without, your board of directors' permission even. They could just buy up all your stock and they'd be like, we own you now, goodbye. And that's something that companies don't want. And that's something that investors often don't want either. And so that's another reason. There's a third reason here that is a really big reason, and that's because most of the people who run the companies get paid in stock, and massive amounts of stock. So they make more money off of the stock than they do off of their paychecks. That money, that stock, they can't just sell that stock. They can't get it and sell it and be like, I made money, yay. They have to hold on to it for a certain amount of time. There's rules about that. And so they then want the stock price to go higher purely through for selfish reasons. And so if you get $10 million of stock and then there's a deal on the table that's well, this will be a short-term hit to the stock price, but over the long run of the company it'll be better. Or you can not do that, and the stock price will go up. You maybe as a person who is the CEO of that company or on the board, what you want in the end is to make lots of money, and so you want that stock price to go up. Because then, at the time when it's time for you to be able to sell, you want that to be at the maximum value so that you can sell it and then have that as actual income. Now, I'm sure that there are other reasons. I think that there are reasons. I'm not coming up with any, but I know that there are other reasons. If you know other reasons why a company would be concerned about their stock price in particular, please let me know. It always seemed to me that it's much more important that you just make money and are able to pay your employees, but obviously the world of big business in America is a complicated one. So I just wanted to share that, and I'm going to link this on my video that I'm putting up now so that people can know that when I say that stock prices that the money in the stock market doesn't have any real value, doesn't really do anything, that it does do something. It just doesn't do as much, in my opinion, as actually income, which gets used by families to buy things and do stuff and have services and goods. Another one that I just came up with that it was in the back of my head is that stock prices, just the stock market in general, it provides a system by which companies can go public, and that becomes a very good incentive for people to invest in early stage endeavors. And that's important. We do need companies to invest in early stage endeavors, like things that are risky, venture capital and angel investors and stuff like that. We do need that, and I think that that's important, and that's an important kind of investing. And yeah, those people pay capital gains. When those people who invested in Facebook and then they sold the stock in the IPO, they would then pay capital gains on all that money, not ordinary income. So that's And that is an important function of our economy, that we invest in startup companies that do new and interesting and different things, because that's how we keep the economy rolling, and we keep up with, the next stages in what the worldwide economy is going to be doing. And hopefully we can do that with our energy economy soon, because that sure hasn't been happening, and it's frustrating me as an eco-geek. So that's tangent, but that's, yeah, so I just want to make that video, and sorry, it's super long, but hopefully interesting, if you're into this stuff. If you're not, apologies.